It's wild, but one of the absolute hardest skills in trading, it literally has zero to do with reading a chart or nailing a flawless entry. Nope. The hardest skill, the real game changer that completely separates the pros from the amateurs, is just knowing exactly when to walk away. We see it all the time, right? You start the day with perfect discipline, and then bam, you completely lose control after one bad trade, maybe one massive win, or just an emotional slip-up. It's not always your strategy that's failing. Honestly, sometimes the absolute biggest edge you can have in the market is simply knowing when your trading day is over.
So, when is your trading day actually over? Look, there's this totally toxic myth floating around the trading community that more screen time automatically equals more money. But honestly, that couldn't be further from the truth. Deciding to stop is a crucial risk management decision. Think of it as your ultimate shield. It protects your capital, it protects your mindset, and it protects that trading plan you worked so hard on. Staring at your charts for 8 hours straight, that usually just breeds overtrading. When you actively choose to turn those screens off, you are literally choosing to preserve your edge.
Because there really is a massive, massive divide between disciplined stopping and just emotional spiraling. The amateur, they usually decide when to stop while they're trading, and surprise, surprise, that's almost always when they're angry, desperate, or just completely out of capital. But a professional does the exact opposite. Their stopping rules are literally carved in stone before the session even kicks off. You should never, ever be deciding when to call it quits while your emotions are running hot. So let's break down the specific reasons that scream, hey, it's time to call it a day.
All right, reason one, you hit your daily loss limit. This is the absolute maximum amount of money you allow yourself to lose in a single trading session. And this limit exists for one very specific reason: to stop a bad day from spiraling into a catastrophic day that genuinely damages your whole account. Let's put some numbers to it. Say your account size and your risk profile give you a hard daily loss limit of $500. Well, the very second your daily P&L hits negative 500, those screens go off. Zero exceptions. I'm serious. No, oh, let me just make it back real quick. No, okay, just one more trade. And definitely no reducing your size just to hang around in the game. You are done. If you're still clicking buttons after that limit is hit, you're not following a plan anymore. You're just gambling. Moving right along to reason two, you break a major rule. Even if you're actually up on the day, breaking a serious rule is a massive, glowing red flag. We're talking about stuff like moving your stop loss out of pure fear, revenge trading because you just got stopped out, oversizing your position, or chasing some random setup that isn't even in your playbook. Just one single rule break is a blaring warning siren that your emotions are completely hijacking your logic. And here's why that's so dangerous. A broken rule almost always triggers this nasty cascade. Step 1, you break that major rule. Step 2, you get frustrated, so you start revenge trading to magically fix the mistake. And step 3, boom, you trigger a full-blown emotional spiral. If you keep trading after breaking a core rule, I can almost guarantee your next trade is going to be even worse. Pros stop immediately the second they catch a rule break, simply because they know they have to protect themselves from this exact downward spiral. Okay, let's flip it and talk about the winning days. Reason 3, you hit your profit goal. Yep, you can absolutely trade way too much on a green day. A strong winning streak can breed some serious overconfidence. You nail a few great trades in the morning, your account is hitting new highs, and suddenly, you feel completely invincible. And let me tell you, that feeling, it is incredibly dangerous. So please remember this. Keeping your profits is actually part of the job. When you get that invincible feeling, you start forcing these low-quality, sloppy trades in the slow afternoon section just because, hey, you're up, right? You think you're playing with house money. But no, that is your money. If you hit your daily profit goal, you really need to consider drastically reducing your position size, or honestly, just stopping completely. Which perfectly leads us to reason 4. You trigger your giveback roll. Now, this is a total pro tactic that retail traders almost never use. A giveback roll essentially sets a protective profit floor. It ensures that a fantastic winning day doesn't slowly bleed out into a flat or worse, a red day. It tells you exactly when to walk away after you've given back a specific portion of your peak profits. Let's look at exactly how this math works. Say you had a killer morning and you're up $500, but your personal giveback rule allows for a 30% drawdown from your daily high. Well, 30% of 500 is $150. That means the absolute split second you give back $150, dropping your daily profit down to $350, you slam the laptop shut.
It protects your day and it stops that emotional overtrading way after the absolute best opportunities have already come and gone. All right, reason 5, market conditions change. Here's the harsh reality. The market does not care about your playbook. Sometimes the overall environment just abruptly stops matching your specific edge. You might have a strategy that absolutely crushes it right at the 9:30 a.m. open, but then it gets completely chewed to pieces by noon.
Just think about clean morning momentum versus slow, miserable midday chop. If you're a breakout trader, you thrive on volume, right? You need momentum. But if you get stuck in a tight, choppy midday range, those breakouts are going to fail over and over again. On the flip side, a reversal trader is going to struggle big time in a massive, relentless trend. If the market no longer fits your playbook, the smartest, most profitable move you can possibly make is just to stop trading and wait for better conditions.
And finally, reason 6, you feel emotionally compromised. These are those internal psychological signals that tell you the session is over long before your account balance hits some hard limit. You really have to cultivate the self-awareness to recognize these feelings in real time.
We all know these emotional triggers, right? Anger, desperation, greed, just pure fatigue, fear, or that burning desire for revenge against the market. These emotions will completely compromise your objectivity. They lead to terrible entries, awful exits, and completely shattered rules. Honestly, if you ever find yourself trading just to prove a point or to avoid feeling like you were wrong about a particular stock, you are no longer trading objectively. Right at that exact moment, the absolute best trade you can make is just closing the platform entirely.
Now, it's one thing to actually know all these rules, but enforcing them, that's a whole different beast. And that's exactly where TradeZella comes in, as your ultimate accountability partner. TradeZella helps you seamlessly track your daily profit and loss, your mistakes, your emotions, your setups, and yeah, most importantly, your rule breaks.
Let's quickly map out how this actually solves those common behavioral failures. If you constantly struggle with undetected emotional shifts while you're in a trade, their trade replay tool completely fixes that. Keep abandoning your journal because typing it all out takes forever? The 500+ broker auto import handles it instantly. If you have a habit of ignoring your own mistake patterns, the Zella AI auto tagger steps in and categorizes them for you. And if you usually just shut the screen and fly blind after a session, the AI session review agent will automatically compare your actual results right against your morning plan. Basically, it makes your stopping rules measurable instead of just emotional.
Honestly, one of the most powerful features here is the trade replay tool. Think about it. Most traders finish a session, they glance at their P&L, and they just move on. But Trade Replay lets you go back and watch your actual executed trades play out candle by candle, tick by tick, using real market data. You can literally review the exact moment your discipline shifted. You see precisely when and why you kept trading too long, which is exactly how you fixed the habit.
Because without that strict accountability, it is so easy to fall into devastating habits. I'm talking about tweaking your daily loss limit mid-session, or pushing forward after a revenge trade, giving back an entire green day, trading just because you're bored out of your mind, taking just one more trade when your plan is screaming at you to stop, and ultimately treating your stop rules like they're just light suggestions instead of hard, unbreakable laws. A tool like TradeZella shines a massive, unavoidable spotlight on these exact behaviors.
So the absolute crucial takeaway is this. You know it's time to stop trading when your risk limit is hit, your rules are broken, your profit is protected, or the market just plain doesn't fit your setup anymore. Let me say it loud and clear. Stopping is not weakness. It is discipline. The traders who actually last in this game, the ones who survive and thrive over decades, they aren't the ones glued to their screens trading all day, every day. They are the ones who know exactly when their edge is gone.
If you are truly ready to lock in your discipline, stop the emotional spiraling, and start tracking your real edge, you absolutely need the right tools. Try TradeZella. Use the exclusive promo code WOR20 at checkout today, and you'll get 20% off all TradeZella monthly and yearly plans. Build the discipline to know when to stop now, and your future self will seriously thank you. So, what is your hard stopping rule going to be tomorrow?